Hey everybody, Smart Silver Stacker here. There is a lot going on in the economy right now. We've got metal shortages, gold and silver just had big moves up, energy is rising. Vladimir Putin just predicted that $100 oil is quite possible. And on top of that, we've got inflation up across the board. And what are central bankers doing? Kicking the can down the road, printing currency, and monetizing more debt. So we've got a lot to talk about today. Let's get to it. So we have got a lot to talk about today. Let's start off with this headline from the Financial Times. London Metal Exchange moves to stem draining copper reserves. Inventories of the metal have fallen this month to their lowest levels in 47 years. And I'll read a little bit of that article for you guys. The London Metal Exchange took action to calm turmoil in the copper market late on Tuesday by introducing temporary limits on some prices after a plunge in stocks of the metal in its warehouses disrupted trading. The LME said it would adjust its rules requiring large holders of the metal to lend back to the exchange. It also said it would bring in a limit on backwardation, a scenario whereby spot contracts trade at a premium to futures contracts, indicating that the market is undersupplied. Robust demand and rising copper prices pushed inventories of copper on the LME to their lowest level since 1974. Stocks stand at 15,225 tons compared with more than 200,000 tons as recently as September. That in turn has pushed spot prices to record highs versus future prices of more than $1,000 a ton this week. The London Metal Exchange took action to calm turmoil in the copper market late on Tuesday by introducing temporary limits on some prices after a plunge in stocks of the metal in its warehouses disrupted trading. The LME, which is basically the biggest metal exchange in the world, I believe it's advertised as such. It's the World Center for Industrial Metal Trading, and they're having shortages in copper. Now, here's another headline that tries to sort of do some damage control and dismiss this. It's from Reuters. It says London Metal Exchange has to restrain disorderly copper. This article goes on to say that some commodities trading companies, specifically Trafigura, which is a Swiss multinational commodity trading company, they've moved in and they've bought up all this copper. And then the article goes on to kind of compare this to a copper squeeze that happened back in the 1990s. It was called the Sumitomo scandal, and that was because of a rogue trader who was manipulating the market. However, this time around, the squeeze is really not being brought on by manipulation. In fact, the LME determined that Trafigura and other purchasers had legitimate cause to buy up so much copper. Trafigura claimed that it was purchasing the copper for clients in China and Asia. So this time, the squeeze is actually real. It was determined it's not speculative investors trying to corner the market. It's really just brought on by demand for the metal, and the LME is sort of the market of last resort for industry, and they've gone in there and they've actually bought up all of this copper that they had. Now, this article from Reuters also goes on to kind of blame this on supply chain disruptions. I'm sure that that's absolutely the case. When you shut down your economy and you stop production of things like copper, well, the world keeps on needing them once it gets reopened. China is continuing to electrify and develop their country. The developing world, I'm sure, is using lots of copper, as are American industries like Tesla and EV manufacturers, not to mention the push for the decarbonization of our electrical grid. That's going to require a lot of copper as they try to build this green energy infrastructure. So there's a lot of factors that are weighing on the copper supply at the moment. But, I think a big one that, of course, nobody ever mentions is the effect that all of the currency creation that we've seen over the past year and a half, 2 years, the effect that all of that is having on commodities. We always see supply chain disruptions being touted as the issue, and yet, the supply chain disruptions, although some of that is linked to the pandemic and the shutdown, it's also symptomatic of the problem of inflation of the money supply, because it's not necessarily a shortage when prices spike up if you've just created a bunch of currency. It's just the fact that the currency that you're using to purchase the goods has lost value. So I don't think that we need to necessarily characterize this spike up in the price of copper and the low available supply as entirely the fault of supply chain disruption. Some of it does have to do with all of the currency inflation that we've seen. And if we take a look at the long-term chart here for copper, we can see that copper is actually right near its highs from 2011. Gold and copper actually both are near their 2011 highs, which is notable because silver topped out at $50 in 2011, and its spot price is still less than half of that number. So I think it goes to show not only that inflation is alive and strong and it's driving the prices of metals like gold and copper much higher, but also that silver is still really, really undervalued relative to those other commodities and has a lot of room to move up in order to simply reach sort of the same level that some of these other commodities have already moved up to. And so therefore silver, I think, still represents an amazing value. Although, copper is also something I've advocated stacking in the past. If you guys have seen my videos, you see this copper bar here, I'm not a huge fan of copper bars as a form of copper investment because the premium is so high. Although, honestly, having something like this is still probably better than holding on to a bunch of fiat dollars. But if you really want to get a good deal on copper bullion, U.S. nickels are the way to go. You can go to the bank and you can just pick up $100 boxes of nickels, and their metal content, they're 75% copper. So when you combine the 25% nickel and the 75% copper, when you figure out the value, the melt value of a nickel, it's actually over 5 cents. So if you want to get copper bullion and nickel bullion below spot in a very safe form because it's legal tender, you can just still pick up some nickels. And I'm going to talk a little bit more about nickels later. We had some interesting comments on the channel about those, so I'm going to get into those. But first, let's talk a little bit more about gold and silver. They had a big week. Silver's back up over the $24 level after touching down into the 21s. So that's a pretty big bounce back. Now, will we sustain it? That will remain to be seen. We could, of course, drop back down, I suppose, but it really seems like gold and silver are both starting to respond differently to this inflation news. For a while there, it seemed like every time an inflation headline would come out, gold and silver would drop. And I would expect that that's because traders and investors, when they would see that inflation news, they would begin to anticipate the Fed moving towards tightening. But now it seems like gold and silver, on news of higher inflation, they've begun to move up. So that could be a fundamental sea change in the way that these metals are responding to the inflation that is working its way through our monetary system and through the economy. And I think it might be a sign that people are becoming more aware of what a persistent problem all of this inflation is going to be, and that it's not going to be transitory and it's not going to go away easily or simply. And one place that we're really beginning to feel the effects of shortages and inflation is in junk silver. I did a video a few weeks ago about the ongoing supply crunch that we seem to be experiencing in junk silver and how a lot of the online dealers have very limited supply of this stuff and how the premiums have been moving up. Got some mercury dimes here. That's one of my favorite coins, and I do love junk silver. I just got this email a little while ago from JM Bullion, and it was an ad asking me to sell junk silver to them. So they're sending out these emails to their subscribers, to anybody who shops with them, asking to buy junk silver, and they're actually offering over the spot price for junk silver. If you want to sell your junk silver right now to JM Bullion, they will pay you $2.50 over spot. So we're really beginning to see the short supply of junk silver take effect as dealers are now having to go out into the market with their customers and pay more than the spot price of the metal to get this stuff. What this clearly shows is that JM Bullion is having a hard time sourcing junk silver from their normal supply channels. So people aren't selling it to them the way they normally do. Maybe the folks they get it from, the coin wholesalers, whoever that might be, they don't have the supply that JM Bullion would like to get. And JM Bullion is actually one of the dealers I featured in that video. They had no junk silver, and there have been a few occasions over the past couple weeks where when I've checked the JM Bullion website, they had no junk silver in stock whatsoever. So this is just further evidence that a shortage is developing in junk silver. I think it makes sense that we would see a shortage in silver bullion in junk silver first before we see it in other forms of bullion, because the thing about junk silver is it has an extremely limited supply. There's no new supply coming onto the market. No more of these coins are being minted. They are just being hoarded. And so it's going to have one of the tightest supplies of all silver bullions. I mean, even with something like an American Silver Eagle or, Canadian Maple Leaves, whatever you want to talk about with modern bullion, they can always buy silver from miners and then mint more of these coins. So the supply can continue to increase. But with junk silver, that's just not the case. So I think that we're going to continue to see premiums move much higher on junk silver. I hope you guys have already stacked some. Of course, none of this is investment advice or anything, but if you do see an opportunity to get some junk silver, you might want to take it, because I could foresee a time in the future when this stuff just simply becomes unobtainable, or the premiums will just be sky high over spot. And that goes for anybody who wants to sell it too. So this scarcity and these rising prices, I mean, really, it's a good thing for anybody who has a sizable stack of junk silver. And I think it proves that stacking junk is definitely prudent, and it should be a part of every stacker's stack. And speaking of inflation, it seems like if you look at the news these days, headlines about inflation are everywhere. And I want to get to those in just a moment, but real quick, if you guys are enjoying this video, please give it a big thumbs up, click that like button down below, and while you're at it, why not subscribe to the channel and click that bell notification icon so you can see more videos just like this one in the future. Now, speaking of inflation headlines, here's just a few from the past day or two. Here's one from the Wall Street Journal. Powell says supply-side constraints have worsened, creating more inflation risk. Okay, Jerome Powell, I think what's creating the inflation risk is the massive amount of currency you're creating, and the supply side constraints might have something to do with that, or maybe they're just a symptom of the real problem. But all of the currency creation, that's what's going on with inflation, just to clue you in if you're watching. Here's one from Fox News. Chipotle could combat inflation with more menu price increases. Yeah. Expect to see the cost of food rising, and I think that this is a trend that is really going to accelerate moving into 2022. So if you guys don't have any food on hand, you might want to consider stocking up, because it could become very expensive to feed your family in the near future. From Bloomberg, we've got JP Morgan says Bitcoin's record run is being driven by inflation. Yeah, obviously, and we're about to see a run, I think, in the precious metals and copper, too, that's going to be driven by inflation, so get ready for that. From Good Morning America, of all outlets, consumer goods costing more because of supply chain strain and inflation. Now, look, when Good Morning America is reporting on inflation, you kind of know that the inflation story has entered the mainstream. So expect to see more and more people talking about this as time goes on. And yet still, I think that there's still ample opportunity for anybody who wants to stack some metal up, get their hands on some copper bullion, get their hands on some silver, get some silver bars, some silver coins, any kind of physical metal. I think there's still an opportunity. And you can tell that even though the public might be aware of inflation, next time you strike up a conversation with somebody about it, see what their talking points on it are. I'm sure that the majority of people are just going to be regurgitating something from Jerome Powell or one of these other talking heads, that we see touted and brought out and paraded around for the media to give us some talking points like, inflation is transitory, or they'll blame it on supply chain issues. And yet, if you talk to them about the amount of currency that's been created, or if you even ask them about precious metals or inflation hedges, you're just going to see their eyes glaze over, because I really don't think that the population at large has become aware of how big of a problem this is going to be, and they're certainly not aware of ways to protect themselves. So if you are thinking of hedging yourself against inflation, again, not financial advice, but I still think that the prices that we're seeing in precious metals, and especially silver right now, are a huge opportunity, and we still have time to prepare, but that time is growing shorter. Now, here's one from the BBC. Inflation likely to hit 5%, warns Bank of England chief economist. Yeah, I think it would be more accurate to say inflation likely to surpass 5% by a massive margin. This is all damage control. This is all central bankers trying to keep the lid on inflation expectations and prevent people from panicking and just maintain the status quo as long as possible. Because honestly, the way things are going with $29 trillion in debt and $157 trillion in unfunded liabilities and interest rates near zero, and the Fed purchasing $120 billion worth of assets every month, I mean, direct debt monetization, that's all they can do. The only game is to just try to keep the system running as long as possible because there's no good outcome. I mean, we're looking at either a default on the US debt and debts around the world, or we're looking at them being paid back with worthless fiat currencies that have been devalued by currency creation, because that's the only two options we have left in this Ponzi scheme of an economy that we've got going. So even if you look at the CPI for all major categories measured, it's at 5.4. So it is already exceeding that 5% number. And let's be real, I think we all know that the CPI understates inflation, at least to some degree. They do things like substitutions. If steak moves up too much, they'll substitute chicken. Or they do hedonic adjustments where even though a car costs more than it did 20 years ago, now it's got, electronic locks and AC as a standard feature. So you're getting more value. I mean, there's all sorts of ways that they manipulate that CPI number. And it is certainly in the interest of the central bank and the Treasury Department to keep expectations of inflation lower than what is in reality. I mean, if you go to the grocery store, I think you know that inflation is much higher than what is being reported. If you go to the gas pump, we know that inflation is much higher than what is being reported. You can feel it in your pocketbook already, but what we're feeling now is just a taste of what is to come. So I am going to keep stacking, and you guys can head down to the bank if you want to get some copper bullion. You don't want to do anything too risky. You can always just convert some of your fiat cash into nickels. They have these $100 boxes down there. It's nickel bullion below spot when you're buying it at face value from your bank. And I suspect that these may not be available for too much longer for anybody who wants to get their hands on them. That's just kind of an off-the-wall prediction. I mean, what do I know? I'm just some guy on the internet. But I think that there may come a time when nickels are no longer made of copper and nickel. I suspect that the mint may change their composition to something less expensive, perhaps some zinc or something along those lines. They've already talked about this in the past, and as inflation really ramps up, I think we're going to see that. But as for now, you can, if you've got $100 in cash sitting in your bank account or you have a $100 bill, you can convert that to nickels and you still have $100, except you have it in a bullion coin form. So, it's a low risk proposition. And on that topic, I had a great comment from Ranch Hand Fencing the other day. And I'm going to read that comment to you guys because I think it's a good food for thought. Ranch Hand said, "This is a simple task and you won't lose value. With the current supply shortage and prices spiking for base metals like copper, zinc, and nickel, we should all do our part and help metals shine even more. Here's a simple task, and if we could get enough people on board, it would have a massive effect. If every metals fan went down to their bank and took possession of $100 or more of physical nickels and stored them away, it would cause massive demand and the mints would have to make a massive purchase. Why do I say nickels? Because nickels are 75% copper and 25% nickel. With the massive push towards electrifying everything, nickel and copper are in high demand and the prices are rising fast." And then Ranchan goes on to say, "There's a few key reasons why I say this. Number one, if the price of copper and nickel skyrocket, the news will pick up the story, thus causing more interest in investing in metals, hopefully causing people to think about precious metals as well. Number two, it will cause a massive hiccup at the mints, and any hiccup at the mints will cause prices to rise. Number three, nickel and copper are in high demand for the massive demand for electrifying everything. Four, it won't be much longer before inflation rears its ugly head for miners to produce as they deplete their best reserves. Number five, could you imagine if we had a Wall Street bets type of movement for just base metals, something as simple as taking possession of $100 worth of nickels or $1,000 worth of nickels each? What would that do for all metal prices and the light that would shine on how important metals are for the world as we know it? Number six, yes, with silver being a byproduct, there would be more silver on the market, but I believe this would be for a very short time as eyes begin to open on the importance of silver." Okay, so I know that was kind of a lengthy comment. Thank you guys for letting me read that whole thing, but it's a really interesting idea that Ranch Hand Fencing posits. And, I know that there's Wall Street Silver. I love the Wall Street Silver subreddit. Shout out to Wall Street Silver. Anybody who's watching, who's an ape, go apes, ape like shiny. That's all good stuff. What he's talking about is sort of the same kind of a move, just with U.S. nickels. I wouldn't want to take attention away from silver because I think silver really does represent the best opportunity in the metal space right now, even more so than copper or gold. But here's the thing, it's quite a commitment to purchase silver bullion because, silver can go down, silver can go up. It is a somewhat volatile metals market. But if you've got $100 cash or you've got $1,000 cash, it's really no risk at all to go pick up a couple boxes of nickels from your bank and stick them in your closet. And then, hey, if nothing happens, whatever, you can take them back and redeposit them into your checking account, or you can just keep your emergency fund in nickels. I mean, why not kill two birds with one stone? If you're going to have an emergency fund, why not store it in bullion coins? Because remember, even if the price of copper and nickel drop drastically, you can always take your nickels and spend them or take them back to the bank and deposit them. They still have their face value. So anyway, obviously, even if everybody watching this video went out and grabbed 10 boxes of nickels, that would probably make some kind of an impact just because, there was a change shortage last year. But if we could get really lots of people, say everybody on the Wall Street Silver subreddit, they've got 150,000 members, everybody went out and got one $100 box of nickels, that would definitely create some kind of a supply crunch for coinage. Now, mind you, I don't necessarily know that the idea that the media would pick that story up in any kind of an honest way is valid, because I would expect there would just be some kind of obfuscation. They would blame the nickel shortage on something other than inflation, because that's typically what these shortages get blamed on. It would be a mystery, or it just wouldn't get talked about, or they would say it's a supply chain problem from the mint, who knows. But you might get some attention to the idea that inflation is just becoming more and more of a problem. So I don't think it's a bad idea. And I think it's actually a good idea to have some nickels on hand. That's why I have one right here. Now, storage and all that, it does take a bit of space and they're kind of heavy, so it takes a bit of energy to move them around. So it's not like they're completely without any downside. But if you don't have any bullion at all, getting a box of nickels is definitely a great place to start, I think. As for the bit about the cost of mining moving up, yeah, with oil up at $83, I suspect that we're going to begin to see the cost of energy bleed over into almost every sector of the economy, because petroleum, it's either in a product or it's used to move a product around. I mean, it touches almost everything. Groceries, if it's conventional agriculture, they're getting grown with a lot of fossil fuel energy. Also, transporting the food around requires a lot of fossil fuel energy, a lot of petroleum. In terms of manufactured goods, petroleum is in tons of stuff, plastics, polymers, all of that stuff, and any kind of good that has to be transported. Most of our transport in this country is done via trucks, and they run on diesel, so it's a derivative of crude oil. So the price of crude oil really is going to start to bleed over into everything. That's going to be the first place that we start to see this inflation. And like I said, Vladimir Putin the other day, he said that $100 oil was quite possible. And of course it is. I mean, back in 2008, the price of oil went well over $100. I wouldn't be surprised if we see some kind of a parabolic run up to $200. I think that's well within the realm of possibilities as far as energy goes. We could see energy go much higher than it is today, even though, gasoline and energy is already moving up quite a bit. But wait until this winter. This winter is going to see energy prices move much higher, I think, and it's going to become a real issue as there's shortages like they're experiencing over in Europe at the moment. We've been spared the worst of the ongoing energy crisis, but it's going to be our turn soon, I believe. Going into 2022, I think we'll see energy prices remain much higher and remain elevated for a much longer period of time. So, what do you guys think about the prospects for metal shortages in the future? What do you think about rising energy and inflation? I think it's only a matter of time before we see more shortages and really before we see a silver shortage enter the mainstream. And I think silver, gold, and all commodity prices really are going to be heading much higher very soon. Let me know what you guys think in the comments down below. And if you want to see more videos about inflation, silver stacking, copper, and more, then check out these videos right here. Thank you all very much for watching. I'll catch you next time. Smart Silver Stacker, out.